All right, so we're going to talk about indicators and some of the ones that I like to use. Vwap, this white line, they're all color coded as well. My 9 EMA is red. My 20 EMA is blue. My moving simple average 50 is yellow. And this one's supposed to be kind of a pink, whatever. So if you got your volume weighted average price, that's not going to change as you change time frames, but everything else will. The 20 EMA and the 9 EMA are exponentially weighted based on the closing of the last 9 and 20 candles, smoothed out as per. We'll click and look here. So I'm going to go over to your study configs, and you can add all kinds of different things that you want to put on the chart. You can have Bollinger Bands, pivot points, VWAP, all the things you like to use. But this works best and easiest for me based on my understanding. A lot of people use MACD very successfully. I cannot understand it. I don't really get Bollinger Bands. Tried, just doesn't work for me. I do use Fibonacci a little bit here and there. But the basics are 9 EMA, and you can configure each one. How you want the moving average type, exponential, simple, weighted, smooth, volume weighted, so on and so forth. Exponential works best. If you don't know what that is, go ahead and go look it up quickly in Google. It's not too hard. You got your line styles. I like to keep them real small so it doesn't mess with my candles, getting in the way. I got my color and my width. Easy enough, commit. All right, and then I go with kind of like the old red, white, and blue because I'm an American. Closest to red is 9, meaning that that's the most recent price action. It's the closest to it. So if it's falling below it, it's starting to get weak. Okay, so there's your little red 9 EMA, there's your blue, and there's your VWAP. Kind of look at this little disaster going on right here. As that 9 EMA pops over VWAP, it's getting stronger. It's pulling further and further apart from the 20. And as you can see, like this shot up real high on volume here in the morning. Well, not so much in the morning, but about an hour in. And let's go ahead and switch to 1 minute. So as it started to pull back, it pulled back and bounced right off that 9 EMA, but it was still making lower highs, kind of broke through it. And as you can see, that 20 and the 9 start to close up on each other, kind of get a little bit choky there. So you want to watch those areas and see how far apart they're pulling, how far above the VWAP, the volume weighted average price, which is all the shares traded for the day divided by what was paid. So that way, at that line, everyone above this, if you're buying it, you're paying more than everyone that was below it, and vice versa. So the further away you are from VWAP above, the stronger in control the bulls are. The further below it is, the stronger the bears are in control. And that's where the lines start to come in as well too. So here's your 200. If that's moving on its way up, it's obviously getting stronger because it's on the last 200 candles. And as you can see, it moved up all day, and pretty much this was moving up. That was moving up. Everything was kind of just on the uptrend. There's that little spot where it got weak, and it started to come back down towards it versus pulling away from it very bullishly. And at that point, it just kind of all converged. They started to turn down, and guess what? That's turning down. But if you're watching your 9, your 20, your 50, and your VWAP, and your 200, you kind of start to get an idea of things. So that's how they're set up. Now we'll go back. I traded this. Unfortunately, I didn't put the actual tickers on that day to show where I traded, but I did pretty well with it. So first, we'll drop some support and resistance. I had to go back pretty far for this, actually. And let's go back and look for... Okay, that's what I charted right there. That was my max, hopefully, like it could get to that day. You can see right there, right there, right there. Failed right there. 381s, I basically dropped it at 375. It was just right below. It's changed a little bit because it wasn't that day, but before it was right there. And 4 was my ultimate entry for this. And I didn't even think it would get up as high as this. I figured it would get to right there. But it had so much crazy volume that day. A lot of people were getting chopped up and stopped out, and it was a wretched day. But early in the morning, I had already set my overhead res for all the places that I felt like it could go, or places I felt like it would test. So when it blew through 349 and had blew past 328, I thought, well, dang, dude, that's pretty high. It got up to 375 areas, And I was hoping for 4, but I was willing to risk off that. I actually traded on Friday. Let's go back there. And the 21st. This was the day that kind of got everybody. So as you can see, I already had lines plotted that day. So when it got up in the overhead res, it hit 375 right there. And everybody else was trying to get short in here, you know, and you kind of could. I mean, it looked like it was going to break down your EMAs, but the volume was just massive. There was no way it was breaking down. And then look, it comes right back, kind of tests. It's coming down, but you got a nice little like kind of bull flag setting up there. A little sloppy, but you know, it's there. And it bounces right off that old support from the past. And it bounces back up and it reclaims the EMA, reclaims the 20, reclaims the 50, and starts just pulling away from VWAP. So that means everyone's willing to pay more than everyone else has previously paid. They're going crazy for it. And it's just kind of consolidating, and it kind of breaks down right there through it. And you think, oh, okay, I'm going to get short right here. A lot of people, you know, we're starting to do that. Well, here's what happens. As soon as it reclaimed, boom, all that volume comes in and it pops up again and again. As soon as it tested that, I thought, oh, I'm going to get 4. I thought, you know, it's getting later in the day. I've been waiting all day for this. All day I want to get in this like everybody else. A lot of people are getting chopped up. It came down. As soon as it tested that, I was like, holy shit, it's going to go. I was willing to risk. I jumped in right here, and it came down. It fell under all of them where they converged. Dipped. Almost made me cover because I got scared, you know, that those little stickies were looking like they were going to pop back up, and I was afraid that it might actually take back off like it had, and I wanted to lock some profit in, but it stopped out just right there and made that next lower high, lower high, lower high, lower high. Came back up and tested again. I thought about getting out, but I still was profitable on it. I still had some cushion, and it just kind of rode it all the way down. That's we talked about that 200. There it is. It swung past VWAP, and then bam, starts curling back down. 50 crosses under. A lot of people call it like a death cross, but it's not a 1 minute. You know, people generally call that one like a daily. People probably make fun of me on this, but still works for me on these. So I'm following the indicators. Well, now it's below the EMA, and it's kind of using that as resistance now above. It's having trouble getting over and over, and it popped up here, but still, if you see it right there, all those little places before that were support are now resistance, and it's just having trouble. So I stuck with it up into about... where did I get out at? I wish I had ticked these. Either way, this was a 9% trade from that day, like 8.57, but I did really, really good on it. And you can see the next day, you know, it opens back up as it was fading off pre-market, and it tried to pop up on volume, but look, right there, 200 SMA, that's why I use them, so you could get short again. Unfortunately, there was no more shares to short at this point, but even when it came down here and looked like it was going to really break down, it tried, and guess what? Resistance, resistance. Tried that 200 SMA, just crowded it right under. So that's kind of how that works. If you know how to set up your resistance, your support levels from before, from previous, a lot of times it goes right back to those and test them, because there's a lot of people interested in those areas like 375. Well, 349 was my interest level, and it blew through it. And 375 came around, and then it didn't quite make 4. So as soon as it made that next lower high, I'm pretty interested, you know, starting to get a little weaker. Though you could have said that here too, and it did pop up. That's where a lot of people are probably getting smoked and down in here too, but I was totally patient because this was still pretty on the other side of those. Over here, it was the first time it really started to slip under really well and not do so well coming back. So I was pretty confident in that area to take it because it had already moved from here to here all day, and it was kind of sideways in this range right here. There was not so much on it. This was just the crazy part. So that's kind of how you use EMAs, VWAPs, 20 SMA, or 20 EMA, 50 SMA, and that. And if you pull that back to different time frames, you'll see that, you know, they're going to change a little bit. And I do scale through different time frames to make sure that I'm not totally off base with things. But for the most part, as long as your support and res are all in there, it pretty much, you know, like right there, right there, right here, you know, it rides up a little bit. You could risk because, you know, it's up a bit, but there's no volume down here. It's just totally nothing left. It's just going to, you know, fade off. So that's where you got to kind of couple price action and volume candles together and use your other indicators to get a little more picture of what could be happening with bulls or bears. And also, if you're watching level 2, you'll start to notice the ass getting heavy. If people are trying to take profits and pull out, especially like up in here. And then after a while, you learn the games people play too, because people say, "Oh, it's so unreliable. You can't watch level 2." Well, that's bullshit. If you watch it enough, you have an idea when things are being bid propped, or someone might put if it's coming down, say like in this area, well, someone might put a huge offer to buy on the bid, and it might be 30,000-40,000 shares. That's equal to like the kind of volume going on that day. It's enough to scare someone, but then somebody will like tap it and they'll take a few hundred shares, and that it'll just disappear. It's gone. So they're fake, they're just putting up shit trying to scare you so that you'll think, oh, that's the bottom. Or a lot of times the market makers, when it gets weak, like in here, they'll, say like have an area of like, this is 280 and it'll drop down to 279, 278, and they'll keep refreshing it up to 280, 100 shares at a time. And then someone will hit it for a decent amount, and bring it down to like 273, and they'll pop it right back up. But with no real volume ever, they're just kind of holding up, trying to put a base in to see if they can get a squeeze out of you, or if they can change direction on the chart. And a lot of times technical people, they'll see that and be like, oh, this is getting kind of good. Hence, that's where, how far above Vwap are you? How far below the 200 are you? Is it curling down? Is it curling up? Is it getting stronger? Is it getting weaker? And couple that with price action up here with volume down here, and you kind of get a better direction. If it was perfect, well, we'd all be rich. It's an art. It's not a science, but everything you need to get a little bit of edge, the better for you. If you can use MACD, use MACD. If you can use, candles and everything else, use candles. I find Japanese candles, volume level 2, and basic moving averages the easiest for me with just simple plotted support and res. Those are the things that you really need to master to have a basic understanding for if you're going to be a day trader for intraminute. Now, the trend on this overall, who really gives a shit? Like, yeah, it's in a downtrend, and people made a lot of money that day going long. It came off the bottoms, but look where it's going again. It's still on its way down. There's intraday pops like this, and there's people screaming to the moon. But then there's people like me that are screaming, ha ha ha, as soon as you hit that res, fuck you, we're going to short your ass. And sometimes we don't win. We cover for a few cents out because that was our price target. And if it gets to the next little bit and we don't see weakness on the volume, then we're going to get out and we're going to wait to re-enter because, well, it'll probably hit that next level. And the bulls that don't have any idea or don't do any charting, they think, oh, look, it's up from $2 to $3.25. It's the next Microsoft. It's the next Jazz. It's the next fucking Tesla. It's going to the fucking moon. Yeah, it's going nowhere, dude. It's going to bounce up a little bit. It's going to hit overhead res, and it's going to come back down. So that's how you chart on a daily to see where your support and res overhead and below is. And then the actual day, when you log in, you want to see, well, what's actually going on that day. Well, it's floating up the test. So if it's floating up the test, you can get long, but you just want to watch for, topping out, weakness. And when you see candles that, or reversal candles, you can go ahead and safely get in when it starts making lower highs. That's pretty much the basics. So anyone that can chart, anyone that can plot support and res and just follow basic lines can pretty much make money day trading.